Welcome, curious minds, to the deep dive. Today, we're not just scratching the surface. We're plunging headfirst into a world where digital assets are, well, rapidly reshaping fortunes.
Yeah, it really feels like a new frontier, doesn't it?
Exactly. People are calling it the new crypto gold rush.
Yeah.
Not dusty planes and pickaxes, but meticulously coded data streams, decentralized ledgers.
And new titans are definitely emerging, trying to unearth these digital riches, things nobody really saw coming just a few years back.
And right at the heart of this, making some serious waves, is a company we're looking at today, BitMine Immersion Technologies, ticker symbol BMNR.
BMNR, right. They've been in the news a lot lately.
So here's the big question for you, our listener. Is BMNR a shortcut to wealth? Maybe a strategic long-term play on the future of finance?
Or is it just, a really high-stakes gamble in this crazy, volatile world of Web3?
We know you want to get smart, fast, without drowning in information overload. That's our mission today.
Exactly. We're going to cut through the noise, navigate the complexities for you.
Think of this deep dive as pulling out the most important nuggets of knowledge, the key insights from what's out there.
We'll be your guides, basically, helping you understand the strategic moves companies like BitMine are making.
And what those moves could mean for the broader landscape, right? Not just Web3, but traditional finance, too.
Yeah, we're aiming for those aha moments, those surprising facts that stick with you.
All delivered clearly, structured, respecting your time. So let's get into it. Let's unpack BitMine.
Let's do it, starting with the basics, the foundation.
Okay, BitMine Immersion Technologies. Founded back in 2019, headquartered in Las Vegas.
Vegas, okay? And the leadership. That's pretty interesting right off the bat.
It really is.
Yeah.
We're talking seasoned pros.
Yeah.
Jonathan Bates, formerly of JP Morgan.
JP Morgan experience, that's significant. And Michael Maloney.
Co-founder of Galaxy Digital, a major player in crypto investment.
So you've got that blend, right? Traditional, finance savvy, meeting cutting-edge digital asset knowledge.
Exactly. Not just tech enthusiasts. It suggests a certain level of strategic depth from the start.
And their operations, where are they actually doing the mining?
They operate 4 Bitcoin mining sites, and the locations seem very strategic, chosen for low-cost energy.
Which is absolutely critical in mining, yeah. Where are they?
2 in Texas, Pecos and Silverton. Known for cheap energy, maybe natural gas that would otherwise be flared.
Makes sense. And the other 2?
Trinidad and Tobago. Again, access to cheap energy, often gas byproducts, and potentially a more stable regulatory environment.
So that focus on energy efficiency, on optimizing costs from the ground up, that's baked in.
Absolutely. And we'll see how important that becomes when we talk about their tech later. It's a core advantage.
Okay, so that's the setup. What about their performance? The numbers as of, say, late July 2025.
The numbers are, frankly, incredible. BitMine has accumulated over 833,000 ETH tokens.
Wow, okay. 833,000 ETH.
Which makes them the holder of the largest Ethereum treasury globally.
The largest globally? That's a huge statement. What's that worth?
About $2.9 billion, just the ETH part.
$2.9 billion.
And to get more specific, from July 28th figures, 625,000 ETH tokens worth $2.35 billion. That's at ETH around $3,755.
Okay, got it. And it's not just Ethereum, right? They hold Bitcoin, too.
They do. 192 Bitcoin, valued at roughly $23 million, with Bitcoin trading near $118,000 per BTC.
So a significant war chest they've built up pretty quickly.
And what's maybe just as impressive or telling is their cash position.
Right. Liquidity is key. How much cash are they holding?
Over $401.4 million in unencumbered cash.
Over $400 million. So combined crypto and cash, we're talking, what, $2.77 billion?
That's the number, $2.77 billion. It's not just piling up digital assets. It's just, robust financial planning. Flexibility.
Resilience in a volatile market. It's definitely a more mature strategy than just hodling.
And a stock.
Yeah.
BMNR. This is where it gets wild.
Ah, yes, the stock performance. What have we seen there?
A phenomenal 359% surge year to date, which is already huge.
359% YTD. Impressive. But I feel like there's a but coming.
Oh, yeah. But wait. It absolutely skyrocketed over 3,000% to an all-time high of $135. 3,000%. When was that?
July 3rd. Right after they announced these huge Ethereum Treasury plans.
Wow. Okay, that's the kind of vertical move that screams crypto gold rush, like you said.
Totally. It captures the imagination, makes people wonder if they found the next big thing.
But also raises questions, right?
Yeah.
About sustainability, fundamentals.
Of course. Such a rapid climb always does. Which brings us to the strategy itself.
And the person driving it, Tom Lee.
Exactly. The newly appointed chairman of BitMine, co-founder of Fundstrat.
A very well-known name in financial analysis, often makes bold market calls. His involvement adds significant weight.
He's the architect of what they're calling the alchemy of 5%.
The alchemy of 5%. Okay, what does that actually mean?
The core goal is for BitMine to acquire and actively stake 5% of the total Ethereum supply.
5% of all Ethereum. That's massive.
It's monumental. To put it in perspective, achieving that 5% means holding roughly 6 million ETH.
6 million ETH. And the cost.
Yeah.
At current prices. Estimated around $22 billion. $22 billion.
Just think about that. Acquiring 6 million ETH. Controlling that much of the network. What does that imply?
That's the key question, isn't it? Influence. Security contributions. Shaping Ethereum's future.
It's definitely the aha moment. It's not just a big holding. It's potentially a controlling influence.
And let's compare it, because this really frames the ambition. Michael Saylor's MicroStrategy hold a lot of Bitcoin, famously.
Right. About 2.9% of Bitcoin's fixed 21 million supply.
BitMine is aiming for 5% of Ethereum's supply, a significantly larger slice of its respective pie.
So even bigger than MicroStrategy, proportionally speaking. That comparison really underscores the scale.
It's not just a big goal, it's huge relative to the asset's total supply. It signals they want to be an indispensable pillar of the Ethereum network.
Transforming them from just a holder into like a core component of the network's existence, which opens up different revenue streams, different strategic possibilities.
That 5% isn't just a number, it's a profound statement of intent, systemic relevance.
Okay, so that level of ambition needs serious firepower, technologically and strategically.
Absolutely. So let's unpack that next.
Yeah.
Beyond the sheer scale, what are BitMine's disruptive edges?
Right. What makes them different? Let's start with the mining operations themselves.
Okay. One of Bitcoin mining's biggest, most criticized challenges is energy inefficiency. It's a huge power draw. Environmental concerns, high costs.
Exactly. Traditional air-cooled rigs are power-hungry, hot, noisy. BitMine's tackling this head-on with a pivot to immersion cooling technology.
Immersion cooling. So dunking the hardware in liquid.
Basically, yeah. The mining hardware, the chips, are fully submerged in a special dielectric fluid. It doesn't conduct electricity.
Okay, and the benefit?
Clear and compelling. Reduces energy costs by up to 30% compared to traditional air cooling.
30%. That's significant.
And it leads directly to boosted output. Machines run more efficiently, can run faster without overheating.
They've used an analogy. Tesla's battery tech for crypto.
That's a powerful analogy, isn't it? It helps you visualize that fundamental efficiency shift.
Like a paradigm shift, having a cascading impact. Lower footprint, better margins.
It's a core differentiator, a potential secret sauce in a competitive space.
And they're not just mining for themselves, right?
Correct. They also offer a mining-as-a-service platform, MaaS.
MaaS, mining as a service. What does that entail?
It basically democratizes access. Allows clients, individuals, smaller institutions to participate in Bitcoin mining without building their own complex, expensive infrastructure.
So you can kind of rent their efficient setup.
Essentially, yes. And for BitMine, it's strategically smart. It generates a recurring revenue stream.
Diversifies their business beyond just mining for their own balance sheet. Turns their tech into a profit center.
Exactly.
Yeah.
Consistent income flow. Okay, so that's the mining tech. What about the Ethereum Treasury strategy? This seems to be the really big play.
It really does. This is where they go beyond simple holding. It's a multi-pronged approach.
Tapping into DeFi, I assume.
Mm-hmm.
Decentralized finance?
Precisely. That multi-billion-dollar ETH treasury is designed to leverage the potential of the DeFi space.
And Ethereum's dominance there is clear, right? Smart contracts, NFTs, stablecoins.
Absolutely central role, especially in the stablecoin market. Which brings us back to Tom Lee.
What's his take on stablecoins?
He sees the widespread adoption of stablecoins by consumers, corporations, banks as the ChatGPT moment for crypto.
The ChatGPT moment, meaning?
Meaning exponential, irreversible growth in demand for Ethereum because it's the underlying infrastructure.
That's a bold claim. Are there numbers to back that kind of potential?
Well, projections are huge. Some suggest stablecoins could become a $4 trillion market.
$4 trillion. That's more than 10 times bigger than today.
Exactly. An incredible surge in demand for the underlying Ethereum network. That forecast is crucial to BitMine's entire strategy.
Okay, so how do they plan to capitalize on that potential surge beyond just holding the ETH?
It's a sophisticated, multi-pronged income generation plan. First, like MicroStrategy with Bitcoin, they intend to use financial instruments.
ETFs, derivatives, that sort of thing?
Yeah, to actively profit from Ethereum's price fluctuations, managing the Treasury like a dynamic portfolio, not a static vault.
Makes sense. What else? This is where Ethereum differs from Bitcoin, right?
Yes, the key differentiator, Ethereum's staking rewards.
Staking. Explain that simply for us.
You lock up your ETH to help support and secure the Ethereum network. In return, you earn rewards, like a digital savings account, but your principal helps run the network.
And this is tied to Ethereum's proof-of-stake system.
Correct. Proof of stake, or POS, which is vastly more energy efficient than Bitcoin's proof of work.
Less power, less electricity needed, and the rewards for staking.
You earn newly created ETH plus a share of transaction fees from across the network. Typically yields around 4–6% annually.
4 to 6% yield paid in ETH. That's not just a bonus, it's significant recurring income.
It's fundamental to their strategy, a steady native income stream directly from the network itself.
A built-in dividend almost. What can they do with that?
Reinvest it to buy more ETH, creating a compounding effect. Or use it to fund operations.
So it's an active role in the network, generating organic growth. Bitcoin holders don't really have that same mechanism inherently.
Right. And this fuels their aggressive reinvestment cycle. This is the core of the alchemy of 5%.
Okay, so they take profits from staking.
From managing financial products, from capital market activities like stock or debt offerings.
And use it all to continuously buy more Ethereum.
Exactly. A self-reinforcing growth cycle. Earn ETH, buy ETH, stock price up, issue shares, buy more ETH.
Amplifying exposure, increasing ETH held per share, driving shareholder value, an engine of accumulation.
Okay, so that engine needs a big playground. Let's talk market potential, their competitive moat, and growth trajectory.
Right, context is important. How big is the overall crypto mining market they operate in?
It's projected to hit $2.8 billion by 2028, growing at nearly 8% of AG's share. Substantial and expanding.
And Ethereum itself, its market cap.
Around $400 billion currently, within a total crypto market cap of maybe $2.5 trillion.
So they're targeting a huge slice of a very large growing pie. This isn't a niche play.
Definitely not. And they're aiming right at that rising tide of institutional adoption.
Which is a major trend, right? Hedge funds, corporations moving into digital assets.
BitMine strategy seems designed to appeal directly to them or even service them. It's a powerful tailwind.
Okay, let's talk about their moat. What are their key competitive advantages? What makes them hard to copy?
First, that proprietary immersion cooling tech. It's not off the shelf. It gives them a real cost and performance edge.
That energy efficiency advantage? Yeah. What else?
Diverse revenue streams, particularly that recurring revenue from the MOS platform, adds stability.
Less reliance on just the crypto price swings. Good point. And the Treasury itself.
The $2.9 billion ETH Treasury is a huge strategic asset, financial leverage, market presence.
But maybe the biggest piece of the moat, the backers.
Crucial. High-profile institutional backing. ARK Invest, Cathie Wood's firm, holds around $182 million stake.
ARK Invest is in, and Founders Fund, Peter Thiel's VC firm.
They're in too. That kind of backing is a game changer. Someone compared it to SpaceX's reusable rockets for the space industry. Transformative.
That's a strong comparison. It raises the question, can competitors really catch up when you have Thiel and Wood essentially validating your approach?
It lends immense credibility and strategic guidance, not just capital.
Yeah.
It signals this is a serious long-term venture.
Okay, so let's get to the core investment thesis. Growth and this claim of superiority. They're using the MicroStrategy of Ethereum blueprint.
Clearly, similarities are there. Using the balance sheet to hold crypto as an inflation hedge, a growth asset.
Leveraging volatility with financial products aggressively accumulating, MicroStrategy definitely paved the way.
But BitMine asserts they have advantages, that an Ethereum treasury company is superior to just holding ETH, or even a Bitcoin treasury. Why?
Okay, several reasons they put forward. First, increasing ETH per share.
How does that work?
A company like BitMine can issue its stock at a premium to the dollar value of ETH held per share. So they raise $1 by selling stock, but can buy more than $1 worth of ETH with it.
Ah, financial engineering.
Yeah.
Leveraging the stock price to accelerate accumulation. ETFs can't do that.
Exactly. It's a growth vehicle for the asset itself, amplified by corporate finance. Second point, attractive financing.
Because Ethereum's more volatile than Bitcoin, that sounds counterintuitive.
It does, but here's the thing. Ethereum's higher volatility, like 33% greater implied 18 months out, makes it cheaper to raise capital using convertible bonds or warrants.
Cheaper. How?
You can essentially sell that volatility to investors through these instruments, offer them participation in the potential upside, which lowers your borrowing costs. It turns volatility into a financing advantage.
Wow, okay. That's clever. Turning a perceived weakness into a strength. What's the third point?
Operating business and native revenue. This is the staking part again.
Right, by staking their ETH, they secure the network.
And generate that 4-6% yield paid in ETH. Direct native revenue, not reliant on external markets.
Revenue they can reinvest or use for operations, making them an embedded part of the Ethereum infrastructure, performing a cybersecurity function, essentially.
Which is fundamentally different from just holding a non-yielding asset like Bitcoin. Fourth point. Infrastructure and future positioning.
They see themselves as part of the future financial system's plumbing.
Pretty much. They anticipate big players, Goldman Sachs, JP Morgan, Amazon, Walmart, will want to stake ETH as they tokenize assets and issue stablecoins.
And BitMine wants to be ready, holding a huge chunk of the network's capacity, being the go-to infrastructure provider, getting way ahead of the curve.
Exactly. And the final point. Acquisition opportunities.
Using their potentially premium-valued stock to buy up smaller competitors.
Yeah, if other crypto treasury companies trade near their net asset value, BitMine could acquire them, consolidating holdings, accelerating towards that 5% goal. Classic M&A.
And Tom Lee emphasizes the speed of this, right? The velocity of accumulation.
He really does. He highlights that BitMine achieved in 18 days, growing from $265 million to $2.7 billion in crypto and cash, what took MicroStrategy 180 days for its initial crypto growth spurt.
18 days versus 180. That sheer speed is remarkable, a very aggressive strategy paying off quickly.
And it translates directly to shareholder value. The net asset value, NAV per share, surged from $4 to $23 in those same 18 days.
$4 to $23 per share. That's a six-fold increase in under 3 weeks. That gets investors excited.
Definitely signals potentially huge returns, and there are other confidence signals too.
Like the $250 million private placement they completed.
Right. Shows strong interest from sophisticated investors, and the board approved a $1 billion stock repurchase program.
Buybacks usually signal the company thinks its stock is undervalued.
And Tom Lee basically said buying back shares might be the best expected return of our capital on the road to that alchemy of 5%. Strong conviction.
Analysts are bullish too. Projections.
Some project the stock could hit $60. That's an 80% jump from its recent level around $33.
And the framing. It's not just a coin bid. It's like buying the internet in the 90s.
That's the narrative some are using, emphasizing Ethereum's long-term foundational potential in infrastructure shift.
Okay, powerful story. But no deep dive is complete without looking hard at the risks.
Absolutely essential. Despite the ambition and metrics, there are definite hurdles. It's the crypto roller coaster, like you said.
First and most obvious, price volatility. ETH swings wildly, just like Bitcoin.
And we saw that with BMNR's stock, right? It plunged nearly 27% in a single day, despite attempts to reassure the market.
A sharp contrast to that 3,000% rise perfectly illustrates the inherent volatility.
Stomach-dropping stuff.
Then there's liquidity risk. Staking ETH locks it up.
So that massive treasury isn't immediately accessible if they need cash quickly.
Exactly. It could limit their ability to react to sudden market changes, cover costs, pay debts if they needed to sell fast. There's a trade-off for that yield.
And execution risk. This is a complex strategy. Very complex. And they're still in the early stages, relatively speaking. Plus, the currently unprofitable reported a $6.53 million net loss.
Unlike MicroStrategy, which had a profitable business before buying Bitcoin.
Right. BitMine's success hinges entirely on executing this plan. Accumulating ETH without crashing the price, managing complex financial products, integrating staking rewards smoothly.
Experts say you need a solid plan to protect capital and liquidity for sustained value in these situations. It's a tall order.
Definitely. We also have to look at their financial health, that debt-to-equity ratio, 65.15%.
That's high. It means a lot of reliance on debt. Good in a bull market, maybe, but amplifies risk significantly if things turn sour.
Very true. And finally, the big external risk, regulation.
Always looming over crypto, potential U.S. crackdowns.
Yeah. Changes in how staking is treated, stablecoin regulation, how crypto treasury companies are viewed. Any major shift could severely impact BitMine.
Okay, so balancing the bullish ambition with these real risks, what's the market's overall take? Future potential.
Summarizing the investment view. The bull case is the innovative tech, The huge ETH Treasury, those strong YTD returns, and the heavyweight institutional backing. ARK, Founders Fund.
And the bear case. High debt, currently unprofitable, the wild crypto volatility, regulatory uncertainty.
So the consensus often leans towards a speculative buy, but only for risk-tolerant investors, and with strong advice on diversification.
The early Amazon but riskier comparison comes up. Not for the faint of heart.
But for believers in Ethereum's long game, it's a unique, leveraged play, and there's this echo of MicroStrategy's impact.
Right. David Greider at Finality Capital, an investor in BMNR, thinks this Ether Treasury company boom could boost ETH flows and price, just like MicroStrategy did for Bitcoin.
A potential ripple effect across the whole ETH ecosystem, driven by this kind of large-scale accumulation.
Which brings us to ETH price projections. Tom Lee's bold calls.
Yeah, he cites research suggesting ETH's implied value could hit $60,000.
$60,000. And he personally thinks $10,000 is realistic.
That's what he said. Based on that idea of stablecoins hitting $4 trillion, real-world assets getting tokenized, driving massive demand for the underlying Layer 1 Ethereum.
It's an infrastructure bet, ultimately. And this connects back to traditional finance precedents, right? Like Exxon.
Exactly. Exxon was valued for decades, not just on earnings, but as a multiple of its proven oil reserves, traded at a premium because investors believed in their ability to extract value.
So the argument is, if investors believe BitMine have the right team, tech, and strategy to grow its ETH value per share and lower financing costs,
then it should trade at a premium to its net asset value, just like MicroStrategy demonstrated with Bitcoin.
they're aiming to be valued on more than just the raw crypto they hold, building something greater than the sum of its parts.
Through strategic finance, operational advantages from staking.
Yeah. Wow. What an incredible journey today unpacking BitMine. Their unique position, innovative tech, that audacious alchemy of 5% ETH strategy, strong institutional backing.
And that rapid accumulation velocity really does set them apart.
It forces us, and you listening, to really reflect on what companies like BitMine mean for the future.
So the question remains, is BitMine the disruptive force that will redefine corporate finance in Web3? Or a super high-stakes bet demanding extreme caution?
How do you see its role shaping the future of wealth?
And as we wrap up, here's a final thought for you to consider, something to mull over.
Go for it.
As traditional finance increasingly looks to tokenize assets, leverage blockchain, how might these strategies, pioneered by companies like BitMine, fundamentally reshape corporate balance sheets? Asset valuation.
Blurring the lines between digital and physical worlds.
In ways we're probably only just beginning to grasp.
A lot to think about. Thank you for diving deep with us today on The Deep Dive.
Thanks for listening. We'll catch you next time.